So welcome to my first portfolio update for my brand new InvestEngine Stocks and Shares ISA, which I set up now just over a month ago at the start of the new financial year. If you haven't watched that video already, I will leave a link in the description. Feel free to pause this one now, open up a new tab or something and go back and watch that one just to kind of figure out my thoughts around it, why I picked InvestEngine in the first place, and actually give you an opportunity to kind of go through some of the thoughts in my head because we won't cover everything in this video. Anyway, with that said, let's jump straight into the portfolio. I will record my screen now and pop it up on screen for you like that. With a bit of editing wizardry, we should see that up on screen now. So let's have a quick look at the performance of the account, and I'll also just run through and do a quick recap of what I've got in the account, how I'm finding things so far, and maybe a few different things which I might be able to share with you as I've learned a bit more about the InvestEngine platform as well. And thanks to many of you I've seen who've signed up using my link in the description below to open your own Stocks and Shares ISA. Hopefully you're having a good time as well, and let me know. I'll be really interested in what kind of ETFs and investments that you're making. Don't forget to let me know down in the description. Anyway, on to the update. As you can see here, I have now a total of just under £6,000. I initially started the account with a £5,000 lump sum, which I had transferred back into my bank account from my old Hargreaves Lansdowne account, which I closed just a few months back. That was to make sure that all of my money would now be inside Stocks and Shares ISAs rather than those dreaded fund and share accounts. So everything really I wanted to make sure was going to be tax-free from now on. So my £1,000 extra has just gone in. I've set that up as a direct debit into this account. Now, as you can see on screen, I've got a couple of different portfolios which I've actually shared. The one I'm investing in is called Toby's World, and I have actually made that public. Again, I'll share that as a link. I did also make a separate portfolio with one of my favorite phrases of all time, index and chill, which you're more than welcome to have a look at and have a copy. This one is not one I'm going to be investing in personally. It was just one I wanted to share with you all to make sure that actually you can make this investing thing really, really simple. You don't have to overcomplicate things with multiple ETFs. And if you do want to follow that one, it's literally just 100% VWRP, which is Vanguard's FTSE All-World ETF. So you don't worry about putting things together, picking individual stocks. This is an investment which you pretty much pick, own the entire world, invest regularly for many, many years, hopefully decades, and you should come out the other end pretty good with a nice tax-free lump sum amount of money. Anyway, jumping over to Toby's World, I probably need to come up with a better name for this, don't I? It's a bit boring, that one. Let me just remind you what's inside it, and also I'll point out a couple of interesting points about the portfolio. As you can see with the graph now, you can see that that new £1,000 did go in via direct debit. Just one thing to say on that one, it does take a couple of days or a few days for direct debits to go through. So I don't know if any of you guys have set up your own direct debits into your accounts, but it's not instant. It will take a couple of days to process. And then also the ETF purchase isn't instant as well. So that does take a couple of days. I did actually email support and they came back to me extremely quickly because it was past the bank holiday and I was thinking, why hasn't this £1,000 been ordered in the account? I did see it as a pending transaction, but I was just wondering what happened to the money. But obviously it just takes a few days to go through. So you're not going to get that same dopamine hit that you will do with some of those other fancy wraps. But at the end of the day, I'm not really bothered. Now, quickly in terms of performance, just before we go dive deeply into the actual ETFs in the portfolio, as you can see, it's the normal investing roller coaster. It's only been going for a month. For most of that month, if we actually have a look on the screen now, it has been in the green. We have been up at one point, nearly up £100, and then it pretty much came back down to earth. And now we are minus £14. We're pretty much in the flat as far as I'm concerned at the moment. Now, having a look at what we've actually got inside, as you can see, fairly simple portfolio. Well, simple from my perspective anyway, with 4 different ETFs. The S&P 500, FTSE Developed World excluding UK, the Emerging Markets Fund, and the FTSE 100. One thing you'll notice, and if you haven't watched the first video, all of these funds are the accumulation version of these ETFs. Now, just as a quick recap, the accumulation version means that any dividends that these funds get, they just automatically reinvest them. Whereas the distributing versions would pay you money. There's literally no other difference other than that, and you're more than welcome to pick a distributing version if that's what you want, whether you actually want the money yourself to go and spend, or you might just like that feeling of money going into your account. Either way, completely up to you. I've picked those to make my life super easy. I can just invest them, don't care about notifications, don't care about that dopamine hit or whatever you need to keep yourself motivated, and that's where we are at the moment. Now, just before we talk about the performance of the portfolio, a couple of things I will mention is this is a super low cost portfolio on average. Now, with the different weightings I've got in the account, you'll see here 0.09% total expense ratio, which is extremely cheap if you know you're investing pretty well. And the reason I chose InvestEngine as my Stocks and Shares ISA this year was because their platform fee for their DIY platform is completely free. So my only costs are the 0.09%, which is extremely cheap when you compare that to many years gone by with pretty much any other investing platform. And funny enough, it means that I can invest in these Vanguard funds cheaper than actually using Vanguard's platform directly. And Vanguard's platform directly doesn't actually have access to any of these ETFs that accumulate as well. So top tip there if you are looking to start your own account. Now, performance-wise, things have been pretty flat, although the S&P 500 is up nearly 10%, I think, this year. I think it's up about 8% at time of filming. Things can always change. Things have been relatively flat. We have, of course, huge concerns at the moment with the little mini banking crisis going on in the States. I don't think we've quite seen that here in the UK. I think the UK and the US banking systems are very different. I think a big part of that is because the US is so big. There are lots of smaller regional banks, whereas I suppose in the UK, the biggest comparison would be maybe a few of the digital challenger banks potentially, or maybe building societies, but they're not the ones which are taking massive risks with your money and also buying really low interest treasury bills. I think at the end of the day, some of the concerns there are potentially overblown. I think if you're a long-term investor, none of this really matters. And if anything, I think it's a great time to be a long-term investor and to start investing. Lots of nervousness around the market. We saw lots of great earnings come through. I don't think there's been any concerns for some of the big tech players. Everything seems to be going pretty hunky-dory. Now, depending on who you watch on YouTube, you might come across lots of people who will blow the banking crisis completely out of proportion. There'll be lots of flames in the thumbnail. But in all honesty, I really don't think it's anything too much to be worried about. All you'll see, I guess, is a few of those smaller banks collapse, money be pulled out, transferred to the larger banks. Banks like JP Morgan, etc. over in the US will do very well from this, as they have already been. And if anything, people might then move their money to US Treasuries and get that sweet 4 to 5% interest rates, which are knocking around at the moment. Now, just stepping briefly outside of the US markets, having a look at the rest of the portfolio. Developed Europe's been doing okay so far. Emerging markets have still been on that bit of decline. FTSE 100 has been holding relatively steady. Sometimes it's quite difficult to have a gauge at the FTSE 100 to see how things are doing just purely from an index perspective, because you do have to remember that that doesn't include dividends. So if you do go to Google and have a look at the FTSE 100 and you have a look at the yearly performance versus the S&P 500, you really need to be looking at it from an inclusive perspective of including those dividends. But things have been plodding along nicely. I'm happy with the weightings. One thing you can do with InvestEngine, which I quite enjoyed, I've not done yet, is you'll see the percentages that I've set up and allocated to the portfolio. Now, as your investments go into this portfolio and they change those weightings. Let's say the UK has an absolutely stellar next decade, which who knows, it might happen. That could push your portfolio to maybe 10% UK. And at that point, you might want to rebalance that. So for example, you'd have to sell down your FTSE 100 and then rebuy the other parts of the portfolio which haven't been doing so well. So you can make up those weights however you want. I'm happy where we are at the moment, but that's a really, really straightforward process. Just a couple of clicks to go through that one. In fact, if I do get a chance, I'll show you that one on screen now. Let me just take you through a bit of the rest of the app as I've kind of learned how to use this platform. You can go into the analytics section here, as you can see, and you can get a bit of a flavor of what you're invested in. Because I'm invested in mostly the world, I'll pretty much have all of the major companies in here, but I'll probably have slightly lower weightings than, let's say, if I was just investing in the S&P 500. So you can go and have a look via your regions, which makes a lot of sense. This is exactly what I've invested in. And then over to the holdings section, for example, you are going to see all of the world's largest companies to know that you have a very, 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 very small slice of all these great businesses out there. One thing you will notice, of course, is that there are going to be external companies outside of the US in this portfolio. As you can see here, you have Taiwan Semiconductor and Nestle, some of the biggest businesses in the world outside of the US, creeping into the portfolio at just 1% there. So if you are interested, you can have a look there. You are new to investing. This is a real thing, you know. It's funny when money gets sent over to an investing platform, you always think, well, it's just an abstract idea. There's just money on a screen, but that's real money invested in a real fund, and those real shares which you see here, they are yours. Although it is kind of pulled together, they are allocated to you, and these are your shares at the end of the day. And you are getting a very, very, very small slice of those cash flows, those profits. If that helps keep you motivated, just be aware of that. So you could work out potentially on £226 worth of Apple shares, you know, how many milliseconds or seconds of that business is all owned by you. And every time you go into the shop, you can work out exactly how much slice of every single iPhone sold would be owned by you. Maybe that'll be an interesting exercise to do at some point. Anyway, plans moving forward. So like I said before on a couple of other videos, I've got £1,000 direct debit set up going into the account. My goal would be to max out my ISA this year. I do have a lot of the money mostly sat in my bank account at the moment. I did say to those eagle-eyed viewers with the eagle ears to say that I do have some personal debt in my personal life that I was potentially thinking, right, I might want to pay that off. Therefore, I will just have to use cash flow to pay for, my income to actually pay and get into my stocks and shares ISA this year. So I'm still kind of dabbling in that one. I'm not trying to time the market. I'm not trying to just dabble in DCA just for the fun of it. I do want to just even the money out over this tax year, and fingers crossed also get £20,000 into it if I can, with mostly old money. I'm not Mr. Big Fat Cat who just has loads of money set aside from some magic lottery win or something like that I just put into these investments. This is my real hard-earned money, and also trying to plan ahead and also think for that long term about what I'm going to do with it. So at the moment, direct debit set up to go into those, automatically buy stuff, you get your notifications, you get your emails, and as you can see now, the money's gone in, and then you compare the performance over the short period of time. But as we know as long-term investors, there's virtually no point saying what you've done in 1 month, what you've done in 2 months, what you've done in 6 months or even a year. If anything, and I've said this many, many times, I'd be very, very happy for these accounts to pretty much stay flat or stay in the red. At the end of the day, all that means is every single month that you put money in, you get cheap discounts. And it took me a while to get my head around that, but many of the experienced investors who you'll probably see in the comments, who will also often chime in and really help a lot of people out in the comment section, I'm sure they'll also agree that you get to that stage in your investing career. And, I don't consider myself some kind of expert, but I have definitely got over that hurdle where I can now invest, and seeing my portfolio in the red is just that's part of investing. It's part of the ticket price that you have to pay to get in there. But also, I enjoy it. That's fine. I like seeing those things at a discount. And although it might be easier when everyone's euphoric about the market and really wants to get into the market, like we've seen through 2020 and 2021, and those are great when you get in and things keep going up. But really, the profits are made when you buy those shares and you buy those ETFs in the really low parts of the market, when the market's crashed or having not such of a good time. So stick at it. My plan at the end of the day is to keep DCAing into these ones. I do have them my separate stocks on the side in Trading 212. I won't share that one now. I may not even ever share that one to kind of keep myself excited there. But most of my investing will always be in low-cost passive index funds. Now, if you enjoy your portfolio updates, don't forget I do have my latest Vanguard one, which I will put up on screen now. Alternatively, as I mentioned at the beginning, you can go all the way back and have a look at when I actually opened my InvestEngine account, and I'll put that one on screen now for you. Anyway, thanks so much for watching. Leave me a like on the way out, subscribe for many, many more, and as always, happy investing.